Hello all. Good afternoon. Sorry for the small delay. Yeah, we're just trying to get the just bear with me here. Just trying to, there we go. Trying to get the main screen up. So yeah, good afternoon to all. Welcome from wherever you're joining us around the world. It's nice to see some familiar faces. Fantastic. Right. So today is a webinar based on supply and demand or decision points. So you'll often hear other traders refer to these as supply and demand, and they're not wrong. It's just I prefer to look at them as points of decisions on a chart. Now, I have presented a two-part series on on supply and demand, and these can be found either through our YouTube channel or through the main website. So that's fpmarkets.com, and under resources and through education, you'll be able to find those archived webinars and also the previous presentations, and which are delivered in multiple languages by different experts. For those who have not seen parts 1 and 2, I would certainly recommend viewing these recordings and then maybe coming back to the presentation, as it will likely make much more sense that way. Now, look, I will say I would like any attendees here to prepare as I'm going through the presentation, especially the recap. Try and look on your own charts and see if you can find any decision points that you believe are currently active or have been recently active. And then we'll check these out at the end. Now, given the recent movement in the pound and the dollar, I've struggled to find any near-term decision points for now. There is one on gold, I believe, on the daily time frame, which I will show, but it's not the greatest of decision points. But yeah, so if you can see any decision points, be it stocks, be it currencies, be it bonds, cryptos, whatever, please do let me know, and we'll go over those at the end. So, okay, quick disclaimer, guys: trade responsibly. Derivative products are highly leveraged, carry a high level of risk, and are not suitable for all investors. Features of our products, including fees and charges, are outlined in the relevant legal documents available on our website. Now, so in terms of the agenda for this afternoon, I'm still getting used to the GMT time. So assess market action using defined supply and demand guidelines. Now, if you watch parts 1 and 2, you will already have a brief idea of what I'm talking about. Again, I would certainly recommend watching these after this presentation, and then maybe even coming back to this presentation, and then you'll have a much more broad understanding of decision points. As you can see, the second point of interest is analyze the US dollar and British pound using supply and demand using the decision points. But as I said, I've struggled to find any you know as well as I do, as traders, we look for patterns, we look for setups, and sometimes those setups are just not there. So I will go through the charts live, looking for potential areas. But again, like everything in trading, I cannot guarantee I will be able to spot any, but we can look in the past and try and find some that have worked in the recent trading history. Understanding multiple time frame analysis. Look, this is something I do touch on in most of my presentations, and all it really means is we're looking at the market not just through one isolated time frame. We're looking at a multiple time frames. So we're looking at the weekly time frame. So the bigger picture, we're looking at the daily time frame. We're looking at the H4. We're looking at the H1, the M15. So we take an overall view of the market in terms of where we are in decision points. Now, also there will be a Q&A at the end. But look, guys, as I say in every presentation, if you have any questions that relate to the slide or what we're discussing at that time, please do raise your hand and maybe ask your question then, and then I may be able to address it clearer with the slide in play. So for those who did attend parts 1 and 2 will be familiar with the current slide. as I said, this is only a recap, but I will go into quite a bit of detail here. So the first point on the presentation is strong movement. Now, we do have, let me just quickly go over these four structures here. We have the rally base rally, we have the drop base rally, two demand zones here, and we also have the drop base drop and the rally base drop. Now, for anyone that has followed supply and demand will already be aware of these terms. Now, I personally only look at the, just bear with me. I personally only look at the rally base rally and the drop base drop. I've not fully back tested the rally base drops and the drop base rally, so I can't really comment. Most of my focus has been on the rally base rally purely because I can find them in locations where I believe they have a higher percentage. Not I believe, through my back testing, they've proven to be incredibly valid if you position them in the right location. Now, the rally base rally zone is a form of demand, and it's generally established within an uptrend. So consecutive higher highs, higher lows, higher highs, higher lows, and all that good stuff. So that's an uptrend. And you can also find these at the beginning of an uptrend. So you have reversal structure here coming from a downtrend. So here you can see the lower lows, the lower highs. And here we have the price reversing, and we formed a rally base rally at the early juncture of the uptrend, potential uptrend, or an early uptrend. And the same goes for a rally base drop. Sorry, really quickly, the rally base rally consists of an initial rally followed by a base. So we have a base at this point here. Now, for anyone that follows chart patterns, they will recognize these probably as, you know, the bullish flag patterns. So very similar to that. We're looking for a consolidation of sorts at this point here. And that simply follows up with a subsequent rally to the upside. That's the gist of a rally-based rally. Now, in terms of a drop-based drop, what we're looking for is a drop in price. Look, it says that, as its title implies, we're looking for a drop followed by a base. Again, we're looking for probably a bearish flag sort of formation here, followed up by a subsequent drop to the downside. So these are the two I'll be focusing on in this presentation, as these are the two areas, patterns or structures I have the most experience in. This is not to say the drop-based rally and the rally-based drop do not work. It's just I haven't had the time, or I haven't had the inclination to backtest these areas. And as I said, I prefer these zones because of where they can be positioned on the charts, and I believe that they do give me a higher percentage of successful trades. So that's really what let me just move this over to here so it's easier for me. Just bear with me, guys. There we go. So I'm just trying to clear the drawings. Just bear with me here. Right. Just bear with me. Sorry about this. All right. So drawings. There we go. Okay, so that's really all there is to the rally-based rally in terms of the basics. Now, I look for strong movement outside of the area, to form from this point here. So I look for strong movement. So in terms of strong movement, do I mean one candle? No, I don't. I just mean strong defined upward movement and strong downward movement in terms of a drop base drop. So it might first be, it really is worth touching on liquidity and inefficient price action. So an illiquid market generally has chaotic moves, right? And sometimes large gaps. This is due to the lack of buying and selling volume. A liquid market, which could also be called a deep market, is one where buying and selling is simply plentiful. So we all require liquidity. As traders, we require liquidity if we want to enter a market. A trader has to be willing to take the other side of our trade. And if we want to exit or offload our position, again, another trader or a dealer or even a market maker has to be willing to take the other side of our trade. And this would be very difficult in an illiquid market because there would be a lack of willing sellers or willing buyers. You will note in equities, gaps are common since there is a defined open and close time, so on the exchanges. But with FX, we have continuous trading largely around the clock, well, 5 days a week, and we rarely see gaps. We do, of course, see them over the weekends, but other than that, we don't really, it's very rare to see gaps. What we do see in the FX market, though, is large one-sided price moves. And these can be sometimes referred to as, well, this is how I look at them, as inefficient price moves. Some traders will actually trade into this inefficiency back to the demand or supply. We'll touch on this very shortly on the chart, so don't worry if you're not what's the word I'm looking for? You're not well versed with inefficient markets. So inefficient charts simply highlight a lack of liquidity, so a lack of willing buyers or sellers at that price level or price levels or price area. So once that inefficient movement halts, tops in an upside move, the market tends to want to fill this inefficiency and quite simply think of this as a price gap filling. And this, once filled, is where we look to take our trades. Or we can think of this as, moving from imbalance to a balanced market. So the inefficiency is the imbalance, and the balance is when we balance, we fill the inefficient move. So, however, I must be clear, I will consider decision points that are not entirely efficient, meaning I will consider a decision point if there is an individual upper or lower shadow present at the decision point. You'll see what I mean on the next slide, on this slide, actually, excuse me. So in terms of in terms of strong movement, do we have any questions on strong movement while we're on this slide? If we do, please do raise your hand and let me know, and I can go over this in more detail. If not, we'll move on to the next, which is identifiable trend, which should be pretty simple for any technicians here. An identifiable trend is quite simply, we're looking for our rally base. We're generally looking for our rally base rally to form within our uptrend. So we're looking for the rally base rally to form within the uptrend, and we're looking for the drop base drop to form within the downtrend, which is simply a series of lower highs and a series of lower lows. And for the uptrend, a series of higher lows and a series of higher highs. Now, again, we generally look for the more high probability rally base rallies within the uptrend. We look for the more high probability drop base drop areas within the downtrend. All right, I hope that's clear. So there's not really much I can add to this. So that's identifiable trend checked off. Now, duration. This is something I believe deserves some time. I did go over this in the previous webinars, but look. So let's draw so this is our rally base. Rally within the uptrend. So we have an uptrend who's doing very nicely. We have a base form here. And we're looking for a rally base rally to form. So it's exactly the same as this, but in an uptrend. So we have the high, 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 low, and the base, followed by a subsequent higher move higher. So in terms of duration, what I don't want to see, well, I rarely take a trade where price has done this. It's really traded so far away from the area. And then we start making our way back towards this zone to test this area. Look, I'm sorry about the drawing here, guys, but imagine this. Let me just draw this so it's clear. So it's extended. So imagine this is extended to the right and price is here now. Okay. So price is here. Now, at this point, we have sentiment is to the downside, right? We are forming lower lows, lower highs. I just don't really want to take a trade against the overall trend. Now, I'm giving you the most basics here. So if you're looking to start to use decision points in your trading, I would always stick to trading with the trend. What's that? The trend is your friend until it's something like that. I cannot remember. It's been years since I've really even thought about that. But we really want to take these within the overall trend. So let's go back a bit. Where we want to take our trades is at this point here. Oops. At this point here. All right. So we do not want to see a price trade away from the zone for a long duration of time. We want to see a quick snapback to fill any inefficiency in this move here. So let's imagine this is a couple of strong candles here. You'll see this on the chart shortly, but we have a couple of strong candles here. And we have an inefficient move here. So we're looking for price to fill this inefficiency and trade from the decision point at this area here. All right, so think about this. We have imbalance, the inefficient move. Let's make this nice and simple, actually. Let's go back. Undo, there we go. Let's go back. So imagine this is just one strong candle from our decision point. We have an inefficient move. Now, this is imbalance of the market. The market is currently in balance. Think about this as a gap. So it's a gap higher, and price is now looking to fill this, this inefficient move. All right, so price is now filling this inefficient move. Now we're balanced. We're back into the market's now entered an area of balance from imbalance. So we're now trading from this decision point, and this is a potential long opportunity. All right, so that's the very basic. So we have strong movement in the form of an inefficient move, potentially in the form of in forms of an inefficient move. We have an identifiable trend, check 2. We have duration. So I look for a short duration. That's not to say that they don't work when they when downsides we have a downside bias in the market, but I just prefer these areas. Look, I have seen them work, but just not enough to give me sufficient confidence to risk, your hard-earned money on. So duration, check, fresh. Now, fresh and location kind of go together. So fresh and location always go together, in fact. So if I just remove all of these drawings here and restart this. So I shouldn't have done that. I'm sorry, guys. Let me just undo this. So we want to see, this is our rally-based rally. So fresh and location. So there's a number of different definitions for fresh. All right, Frank, you've got your hand up, my friend. So I'm just trying to see if you've asked a question. Just bear with me. I don't see any questions, Frank, but you've got your hand up. If you want to ask a question, please feel free to post it in the chat box or in the Q&A box. Okay, hand's gone down, so I assume there was no question. Okay, all right. So again, fresh and location. Now there's a number, as I said, there's a number of different definitions of, oh, I see some very familiar faces here. Hi, Daniel. Hi, Derek. Excellent. So look, we have fresh and location. Fantastic. Right. Decision point. We want a fresh decision point. What we do not want to see is this. We do not want to see price. So let's imagine there's a resistance here. What I do not want to see, let's be clear what I do not want to see. So let's imagine this is a resistance and we've broken above this resistance. All right. So we've broken above this resistance. Now, what happens when we break above a resistance? Feel free to let me know in the chat box, guys. This is a question, I guess. But so when we break above resistance, what does this level generally become if it's retested? All right, so look, it becomes support. So once it's retested, it becomes support. So let me tidy this up a little bit. Or try and tidy it up. There we go. So, okay, so we've broken above resistance and resistance has now turned into support. This is what I don't want to see. Okay, this is what I don't want to see because now this is not really a decision point for me. I guess you could say it was a decision point to bounce off of this area, but what I'm looking for is a fresh zone. And it's not fresh for me because it's reacted from a resistance. This is a resistance turned support, not potential. So what I'm looking for is this area of decision to form below a resistance. All right, so this is the resistance. The area has formed. Look, let's keep this nice and simple. Let's imagine this is a round number. So on the euro dollar, the parity was recently breached. Let's imagine this is parity, $1 on the euro dollar. Okay. Now our decision point has formed below this area. Now the decision was made within this zone to break through all of those willing offers, all of those willing sellers at this point here. All right, so this is a decision point. Now, I do not want to see this area formed, as I said, formed from a resistance turn support. What I do want to see is price not reacting to anything, okay? So this is essentially, it's in thin air. So it's a decision not reacting from anything on your traded time frame. So this is the H1, this is a round number, this is the next support, and it's formed here. So we're looking for an area that's formed between two areas, I guess you could say. But think of it, it's easier to think of this as it's essentially formed in no man's land. And we have a decision. We've had a decision to break higher. Now, this tells me that there's strength in the area. And by not only by having the strength to break this area, but we'll also have inefficient price action. Well, we should have some inefficient price moves here, which tend to be filled. Now, the beautiful thing about this is this position where it's traded, where it's positioned. So this is a round number. Let me just write that in. So let's imagine this is the $1 on the euro. And we've broken to the upside. Okay, so what happens when we break above a round number? I've kind of given you a clue already. So this was resistance, potential psychological resistance, and price broke above it. Now, if we come back to test this psychological resistance here, what do you think traders are going to want to do at this point here? They're going to want to buy, aren't they? Because we're already in an uptrend. They think buy the dip, and they think that the round number will hold. Now, look, don't get me wrong. It does sometimes occur. It does sometimes materialize like this. But we know as there's been an important decision made below this. Now, do not get me wrong, these decision points are not always that obvious, and they're normally the better ones, because sometimes these are just formed as small kinks, and we'll get to that very shortly, base formation. But so we're looking to test a trade long from this area, right? But you know what happens here? Traders look to buy. So we have willing buyers at this point here, willing buyers. Now, what happens when people buy, when traders buy? They place their stops below the round number, right? 10, 15, maybe 20 pips, I don't know. But they're sell orders. All right, so once price comes down here and tests those sell orders, this provides any willing buyer from this zone liquidity to enter long. So we're buying into all of those sell orders. Now, what happens when you break below a round number? We also have breakout sellers coming in at this point here. So we have sellers coming in. We have more sell orders, market orders coming in. We broke back below parity. Look, we're going lower, and then they get, it's essentially a bear trap. For anyone that's interested in technical analysis, it's a bear trap. So it traps the bears, any breakout bears, and we enter long at this point here. Now, I do have a question, bear with me. From Steve, do you prefer to trade the breakout or trade the retest? Now, trade the breakout or trade the retest? I always trade the retest, Steve. Always trade the retest. There's no, so if you mean the breakout here, I would never trade that because we've just formed the decision point at this area here. It takes a little while to get used to this, but we're looking for, if you mean here the breakout, I'm looking for the breakout to occur, and I'm looking to fade into that breakout at this point here. So there's a lot of weak hands here. It's maybe a little bit of a cruel term, I guess, but there's a lot of weak hands. So we've got breakout sellers coming in, thinking the market's going to lower levels, 99 cents, next round number. But it's not. It generally is not. We tend to see a bounce from the decision point that caused this move. All right. So, and we look to take advantage of that as informed traders. Let me just see. Did that answer your question, Steve? If it didn't, please do let me know, and I'll come back to that. No problem. So base formation. Now, I think this will be better left to the charts, to be quite honest with you, because my artwork is absolutely awful. So, but overall, we do look for beginner traders in this, for using this method. I would advise looking for the clear base formation. So think of the bullish flags. Look, we've got a bullish flag here. If you can think of just a small consolidation at this point here, a small obvious, look, when you look at for supply and demand, but what we don't want to see is this. I will be absolutely clear here. We do not want to see this as our base formation. We do not want to see this. We do not want to see price do this and then bounce up there and bounce down there. And it just, there's no structure to it. We look for structure. So we want a clear area of, so we don't want upper shadows, lower, these are meant to be upper and lower shadows. So candle wicks. We don't want that. We want a clear area, a clear defined area of where a decision point has taken place in the market. All right, so I hope that's clear. You will see more of that on the chart shortly. Approach. So I've kind of touched on the approach already. And look, the approach here was a perfect example. We have to take in the overall context of what's happening on the chart. Yes, we have a strong, an identifiable trend. Yes, we have strong movement. Yes, that strong movement has broken something of note. We've broken a huge round number, a widely watched round number. The duration, we've not spent too long away from the area, and we've bounced from this the $1 level. Look, what happens here, this bounce, this creates trust within this psychological level. So we've got dip buyers coming in here. And what happens when you see a reaction like this? You generally get the Japanese candlestick formations form. Think of the hammer pattern, maybe even a bullish outside reversal. We rarely get the bullish engulfing patterns because that's focuses on the candle bodies. And as I said, we don't really get the closing prices above or below the previous bodies in the FX market. Now in the stock market, we get that a lot. So we look, so that could be a bullish or a bullish outside reversal here. And what does that do? That creates more trust. So more traders jump in, more retail traders are jumping in here, and this is slammed. All right, they're all slammed out of the market. They're all in trouble here. Now, some will be taken out for break even, but even if you're taken out for break even, what does this mean? This is a sell order. They're all sell orders. They're all pumping sell orders into the market at this point here, right into where we're buying. So we want to buy where everyone's selling, and we want to sell where everyone's buying. That's the main idea of this. So this is a very basic example. We look for this is a very good example, actually, of what you should look for around a decision point. Now, we can also look for resistance. So imagine, support in the form of a double bottom. Now, we all know what double bottoms are, don't we? Consecutive lows in the market. So we can look for a double bottom to form at this location here. So what happens is we get the break of the neckline for the double bottom, and then they get slammed out of the market and trade straight into our and panic. What they do is they panic. So we get a small break above the neckline of that double top. I should say neckline, I guess. And then we trade into all of that pain. So you're essentially looking for pain in the market, and these are painful areas for a lot of traders. Any questions, guys? Look, multi-time-frame analysis is pretty self-explanatory. As I said, it's I will try and look at the charts, show this on the charts a little bit in a little bit more detail. But let me just check. Steve, you never replied. I assumed that I did cover what you asked in that question. If not, do let me know. As I said, no problem there at all. Look, what I'm going to do now is switch over to my the charts. Let me just there we go. Just make sure I'm sharing the right screen there, guys. All right, so this is the, can you just let me know in the chat box, guys, Y or N, if you can see my charts here. You'll be able to see the gold chart on TradingView. And yeah, so I just want to know I'm not talking to myself, and you see a blank screen. Guys, in the chat box, just yes or no, Y or N. Support team, can you let me know? That would be good. Just bear with me, guys. Excellent. So we are. Okay, fantastic. Right. Look, this is the silver chart and the gold chart. So gold has had a fantastic day so far. We are up 2.25%. And gold is, sorry, silver is, sorry, they're both gold. Apologies. This is the gold chart. So let's go on to the larger chart here. Now, what do we have at this point here? Let me remove this now. What do we see here? We see a potential decision point. Now, the only downfall to this is it's actually formed from this resistance turn support. You can see it, right? We have the high. Now, we've broken above this high, and we've retested that high as support. So this is not somewhere I would consider. Now, if this area was formed down here somewhere, we now have a clear decision point, and we want price to come back and retest that area before we headed higher. But again, it's not the greatest of decision points, is it really? Because, you know, you could ask a 4-year-old what direction we are currently in right now on gold, and most would say to the downside. Unless, of course, we do break the, where was I looking? I was looking around this area here. If we break this resistance at 1725, then yeah, I do believe we are heading higher on the gold market, in the gold market. Retest. Yes, retest of what? I had an attendee here say retest. You have to be a bit more clearer than that, I'm afraid. Retest of what? Thank you. Right, so look, we are heading, I'm just going to try and go over to my main charts. So this is a fantastic example, which I brought up in the last presentation, all right? A clear decision point. This is in my main, let's get rid of all the Fibonacci work. This is all just to complement the area. And let me just, so look, this is where I was looking here. So can anyone tell me if there's anything wrong with this? I can highlight the points. We have an identifiable trend. We're clearly to the upside. Now, this is the dollar index on the daily time frame. All right, for anyone that's unaware of what the dollar index is, the dollar index is the dollar value weighted, geometrically weighted again, the geometrically average weighted value of the dollar against 6 international currencies, with euro being the largest component at 57.7%, I believe. So look, anyway, this is the dollar, and we have an absolute picture perfect decision point at 109.31, 110.24. Now, if anyone disagrees, please do let me know, and I'll happily talk about this. But look, so we have an identifiable trend, series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. No one can really dispute that. We have an identifiable trend. We have strong movement out of the zone. Okay, not the most inefficient price action, but we do have strong movement nevertheless. This is strong, clear movement that broke this high at this point here. So it was enough force within this area, enough of enough buying pressure within this area to force any willing offers out from the market from this high at this point here. And to refresh, I think this was I can't remember even how high we've been on a long way back. Okay, so I think that's around, I think it's 20 years ago, 20-year highs. All right, so we have strong movement out of the base. We have an identifiable trend. We have duration. Now, price broke up, price broke down, and then price fell lower and retest. Look at how accurate this was. Price drove to the upside and simply retested the zone almost to the point on the dollar index. Duration. Now, if price had continued higher, this wouldn't have been such a high probability zone. Fresh. Is this reaction to anything to the underside of this on this time frame? Absolutely not. There's no clear or obvious support at this point here that's retesting from. That's used to define this area. It was a clear, isolated decision point. Fresh. Clearly a fresh zone. It was untested on the break. It nearly received a test. You can see the candle at this point here, the lower shadow. But overall, it's a very, very fresh zone. Okay, again, no interaction with any support at this point, and it was a clear decision point that broke this high. We have a question. Give me a second. All right, thank you for that. We have an attendee saying that we have the dollar yen chart right now, daily or H4 time frame. I'll have a look at that very, very shortly. Thank you very much for that. So look, location, perfect location below a high, and we broke to the upside. Base formation, look, this is a very beginner base. This is what you should look for. A very clear, obvious base for any beginners looking at this type of method. The approach, fantastic approach. It was very, very direct. But look, what would have been nice is to have some support form here, right? Let me just zoom out. So what would have been nice is we bounced from this area here, formed a little bit of support, gained a bit of trust in this support here, and then dropped lower to test the area. But we didn't get that. Look, we rarely get all, I think it's 9 points. We rarely get all 9 points. We rarely get all the ducks lining up in one line, if that makes sense. So that's really it. So that's why I highlighted this area. And as you can see, we had a strong reaction from the zone back in early October. Okay, so are there any questions on this this area here? Let me just check, or else I'll have a quick look on the dollar yen actually. These are my main charts. So the dollar yen, let's create a new chart for this actually. Create a new chart. Whoops, sorry about that. Create a new chart. There we go. Let's go down. Let's try and find okay, let's try and go with this one. All right, so this is the Aussie dollar, dollar yen. Dollar yen chart. Good. Here we go. So on the H4, you said H4. Oh, I think I know where you're looking. I think I know where you're looking. Now, let me just check. Now, if you can, I'm so sorry, I cannot pronounce your name. So if you can just let me know in the chat box or the Q&A section if I'm pointing to the right area. Are you looking at this zone here? This point here? All right, you are. Okay, so the first thing I see about this, look, I really do like it, and it really jumped out to me at first, but it's not really fresh. The reason being is we've reacted to the underside of this small rally. Do you remember from the start of the webinar? This is a rally base drop. We've reacted to the side of this, so it's not entirely fresh. Now, you could potentially trade this area, but your stops, to be as safe as you can be, would be above this high to cover this rally base drop as well. But overall, if this was isolated, this would be a fantastic decision point. Not only are we to the downside, we've broken the force from this area, broke this low here, which actually formed a higher high above this point here. 100%, that's a very nice, very good eye, by the way. Let me just see on the H1, see if we can find anything a little bit more closer to home. See, there's nothing. Just going down as far as I can to try and find something. You see, it's all connected. You see there's a small decision point there, another one here, another one there that's been tapped, another one there that's been tagged. Look, there's nothing really that tells me trade me. Does that make sense? Look, when you have more experience with these, you will look at the charts and you'll find those areas that just have trade me written all over it. How long that takes the average person, I'm not sure, but yeah, it's something that certainly requires a lot of screen time. Is it worth it? It certainly is worth it because you're able to trade the markets from a not purely, because you still have to take into account the economic data. Even if you're an intraday trader, you still need to take into account the economic data, right? You still need to know what's coming out on the chart. How long will it take to learn the FX market? There's a question here. So I've read a number of different accounts from different people. Some say it depends, it depends who you're asking. So my honest answer for how long it takes to learn to trade the financial markets would be, it's not months. Look, I'm going to disappoint a lot of people here, but it takes a number of years to become very, very skilled at chart reading. Price action, price action is not just the Japanese candlestick charts. Price action is not just support and resistance comes in many different forms as well. It's a very, very broad skill. And, this goes for fundamental analysis as well. It takes years to really understand how the central banks work and how things go together. So in terms of a number, I would say, it all depends, right? It all depends how much you're willing to put into this. If you're willing to, when I first started, I was putting in, it was insane amounts of hours, but I don't have kids at that. I didn't have kids or anything like that. So I had the time. I was putting in about, 4 to 5, maybe 6 hours a day. I still am quite obsessed with price action, but so I would, if you're putting in enough sufficient effort, I would say 3 to 5 years. If you learn from the right people and you do not take all of these unnecessary courses, because what that does is, what it can do is lead you down a path of incredible frustration. Now, I went down that path as well myself. I signed up to a number of courses. I'm not going to name any of those courses, but I did sign up to a number of courses, and that led to an incredible amount of frustration. And a lot of those courses, what they didn't touch on? It's trading psychology. This is a very psychological game. You're trading with your hard-earned money, and you're going to lose your money on trades, and you're going to be wrong. Now, these are two powerful emotions that can really mess with our heads. No matter how good your technical analysis or fundamental analysis is, there's a lot to it. There's a lot to become a skilled trader, a skilled, consistent trader. Now, I see some questions coming through. All right, so one of the attendees that asked how long has said they traded in the Indian market and they know fundamental and technical analysis and are profitable. Okay, well, if you want to tell me how long it took you to, I see what you mean. The thing is, how long did it take you to achieve consistency within the Indian stock market? That would be a question. If it took you 3 years, it should take you the same really for the FX, because price action is price action, right? Yes, I do understand some currency pairs like the Aussie dollar are less volatile than the pound yen and things like that. So, but price action is price. So look, the attendee said that he's been in, or she, I'm so sorry if I've misrepresented you there. But look, they've been invested for 25 years. So, and 7 years in technical. So yes, look, it takes a long time to reach that level of consistency. And I've always said to people when they've asked me how long, they're expecting a few months. It just doesn't work like that. You want this to be your career. You want to pass this on to your future children or to your children. It takes years of dedication. It's almost akin to going to study at university. So this is something you need to bear in mind if you're just beginning your path of trading. Now, back to decision points. Would I consider this a good decision point? Now, this is a nice decision point. Now, oh my God, that really reacted nicely. Look, I didn't even see that. But look, why I really like this area. Look how nicely that reacted there. I genuinely did not cherry pick this. I was looking at this area. I was looking to see if while I was talking, I was looking to see if it reacted to that zone. And as you can see, it doesn't. So this is a nice zone. We have an identifiable trend at this point. Lower lows, lower highs, lower lows, lower highs, and it's within this area. And look, the decision point formed a strong movement outside of the zone. And we have some inefficiency, a small bit of inefficiency here. And the force from this move took out this very important low and eventually pierced below this much more important low. This is the lower low within the actual trend. Okay, so with that being said, look at the approach. Now look at the approach. This is all off the cuff here, by the way, guys. I didn't plan for this, but look at this. So we have this supply here. What do you think's happening here? Sellers coming in, sellers coming in. Trust, trust, trust. We formed another lower low below this area. Trust, more sellers. Pain, pain, pain. Whipsaw above this area into an area that's almost hidden from the market. Now, we did not even reach this resistance here, this support term resistance. what we did was we reacted to this very reasonably hidden decision point. And look at the move from this area, from entry to exit. Your stop would have been. So in terms of entry and exit, you would look for an entry at the underside of the zone and a stop just above the upper edge of the base. Very similar to any supply or demand. But we're looking for decision points, guys. We're not looking for supply and demand. Think of it as decision points, and it should help train your mind in a quicker fashion, I believe. So we have, this is a very, very nice setup that actually occurred today during the London Open of all, or just heading into the London Open of all hours. So we've whipsawed, we've strongly come above this area. Think of the amount of pain at this point here. Selling, 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 and crunch. We've gone lower. And you know what happened? Look, we did not even reach the round number. How many willing sellers would have been there? Now, the work has already been done. We've trapped all of these sellers here. We do not need any more. Now, if we needed more, if the market needed more liquidity, it would whipsaw this round number here, right? But then we have no trade. We've whipsawed above this round number. We have no trade. We have no clear decision point to trade from. All right. So we clearly had enough liquidity within this area here. Very important zone. And we sold off from this zone here. I hope that makes sense, guys. So, all right. All right. Okay. So any questions, guys? Any questions on this chart? Let me just see. So there's a question regarding webinar series. As I said at the beginning, there are a number of webinars in different languages. We do have the link in the chat box, I believe. Yes, we do. So you can access the webinars recordings from the links shown in the chat box. Now, as I say in every, let me just spin this back to the charts. Sorry about there we go. All right, so I'm just trying to share the screen, guys. Just bear with me. Okay. All right, so you can still see that. Fantastic. All right, so this is, all right, so this was an example, another example of why I do not like this. I'm sure you can all see this, why this was a nice area at the point. But would I have traded this coming down? Although it did bounce to the pip, I would not have traded this because we are now coming to the downside. We have a downside bias in this market. All right, so I would not have traded this. I did not like this fully, but imagine if this wasn't here, this small high here, this would have been an almost perfect area of decision. So we have a clear inefficient move to the upside, and we filled that inefficiency very, very fast, and we moved to the upside, and we broke this high, which was more important than this high because it's enclosed between this lower low and this lower high, and it's really meaningless, but I did not like this, as I said. It's just another example for you guys. All right, so let me just see. You are very welcome, Harish. You are very, very welcome. So look, guys, any comments or feedback, please do send us an email either at supportteam@fpmarkets.com or marketanalyst@fpmarkets.com. Any comments or any suggestions for future webinars, please do go ahead and voice your opinions, guys. Anything you want further clarification on, these emails can be used to contact the research team, and they'll get back to you with a more detailed explanation. Look, in terms of upcoming webinars, we have RSI trading strategies, and that's on the 22nd of November. Same time, guys, 5 p.m. GMT. And what we do here is we really go over the RSI indicator, highlighting overbought, oversold areas, divergence signals, failure swings, and talk about how it can be used as a confirmation tool. Now, we also have a Telegram channel. We have the FP Markets Telegram channel. We also have a newsroom.
The links will be in the chat room. Please do consider signing up for our newsroom. We have a newsroom in our Twitter page, through our Twitter feed. And we have a Telegram channel as well. Now, this is where we highlight a number of data points for the day, open closes, any setups that may be occurring, and all that good stuff. Also, consider checking out our Trading Academy to help learn the ins and outs of trading. Now, again, there will be a link in the chat box. I'll just do one final check, guys, for any questions that I may have missed. Okay, you are very welcome, guys. You are very, very welcome. As I said, any questions, please do feel free to contact me. We're available 24/5, guys, and we'll get back to you as soon as possible. Thank you very much for taking the time out of your day, evening, or afternoon, and we'll see you again very, very soon. Thank you very much.